Hello and welcome to our Bayside Commercial Market Update for November. What a month since our last chat. A new state government with 3 new representatives in the Redlands, a US election, inflation data, interest rate decisions, a horse race that stops the nation, and the countdown to Christmas. The local political landscape has had its biggest shake-up in decades. With Redlands now represented by a unified team of new parliamentarians, we're hopeful that some long overdue infrastructure projects can finally get moving. Transport, healthcare and education need to be the top priorities for the Bayside. Our population growth coupled with strong demand means that we have to be more forward thinking to get in front of the curve rather than being reactive. Olympic venues and hopefully Toondah Harbour will be high on the agenda and can be generational city shaping projects. Congratulations to our new representatives. We wish you all the best in your new roles. Inflation figures dropped at 2.8% in the September quarter. This is the lowest result since 2021 and gave a glimmer of hope that the Reserve Bank may respond with a 25 basis points cut to the interest rates during their November meeting. Unfortunately, that hope was quickly extinguished, with the bank choosing to hold rates for the 8th consecutive meeting, citing a trimmed mean that remains outside of their comfort zone. The washout of all of this is still uncertain. Experts are split on whether we'll see the first cut in February or whether it will be later in the year. The question will then be how low do they go and how fast do they cut? Irrespective of this, the commercial property market in the Bayside continues to set new benchmarks. Recent campaigns completed by our team on a number of prized assets have attracted outstanding results from a buyer pool that remains deep. Funding for quality assets remains readily available and the appetite from lenders is strong. Owner-occupiers are committed to capping their occupancy costs by purchasing premises for the long haul, and with the expectation of interest rate cuts of up to 75 basis points during the 2025 calendar year, that appetite seems to have only expanded. Industrial leasing markets continue to outperform all other sectors with a ridiculously low vacancy rate in the broader Bayside area, fueling continued upward pressure on rentals. Whilst there has been some newly developed stock added to both the Cleveland and Redland Bay markets, it has done little to ease demand and is filling quickly on strong commercial terms. This new reality is providing plenty of evidence to support good uplift in rentals on new leases in older buildings and is not something that can be ignored. We have seen a number of instances recently where building owners self-managing their assets have failed to keep up with fair market increases in rentals, and this has had a significant effect on the value of their property. A good tenant does need to be recognised during what can be sometimes difficult renegotiations, but it should not come at the expense of the valuation. Using a basic return on investment estimate of 6%, every $1,000 in annual net rent is the equivalent of approximately $16,000 in value. It doesn't take much to make a big difference. Our Queensland weather patterns have remained true to form and the storms have started rolling in. Mitigating risk is a key part of our property management service, and our team is aggressively undertaking preventative works to storm-proof our portfolio. With huge delays in getting insurance works completed, the old saying about an ounce of prevention has never been more important. That's it for me this month. Don't forget to have a look at the other content in the newsletter, and as always, if we can help with any queries, please don't hesitate to contact one of our team. Cheers.